Hey gang, today we are going to talk about such an ambiguous thing as volatility. Here's what volatility is. If you don't want the same, watch closely. Many traders overlook this crucial tool and blame their losses on bad luck. In this video, I will dispel all the myths and show you how to predict and how to improve all strategies. Let's go. First, let's understand what volatility is. Volatility is the dynamic of price changes, meaning how much and how often the price changes in the market. This is the main thing we are interested in when trading. Let's learn how to analyze it properly. Volatility is different for different time frames. Always start with larger time frames and analyze the current trading day if it's the beginning of the week, or several days if it's the middle of the week. Here, we can see significant price changes driven by important economic events and global trends. This helps to understand the overall dynamics of the market and the direction and duration of opening trades. Then, move on to minute charts where we will open trades. These intervals show short-term fluctuations, which are useful for our average expiration times. Anything less than a minute is not worth analyzing. Volatility on these intervals can be very high, but it's often just market noise, terminal delays, insignificant fluctuations. Consider these as just scatter. Price changes over such short intervals can be random and unpredictable, making analysis and trading difficult. It's time to talk about risk when analyzing volatility. There's a popular belief that low volatility means low risk and high volatility means high risk. This is fundamentally wrong. What matters in binary options is that the price moves predictably up or down for a certain period of time. Different strategies imply different volatility. For example, in trend continuation strategies, you can use low volatility because the price gradually moves in the direction of the trend, and a sharp retracement is unlikely. But in breakout strategies, we are interested in sharp movements to reduce the chance of a false breakout and avoid errors due to the inaccuracy of levels and trend lines, which work as areas rather than precise lines you draw in your terminal. Now, the most valuable thing you can learn from this video. I'm going to show you how you can use volatility to significantly improve absolutely any strategy. I always trade either breakouts or rebounds. Therefore, in any case, it is more beneficial when the price makes sharp movements and then calms down, staying away from the entry point. A simple fact that will change your trading perspective. Volatility is cyclical and always changing, high to low and vice versa. It always has been and always will be. When I realized this, all the strategies became much clearer. These cycles are not constant and last for different periods of time. Usually, low volatility lasts longer. This is called the accumulation phase, which then becomes the action phase. This law of volatility change is what I use in many of my strategies. I try to open trades to catch the moment when low volatility changes to high. The price rushes in a certain direction and then stops at positions favorable to me. There are a few nuances regarding expiration times, which we'll discuss later. This allows me to use price movements as efficiently as possible. Why does volatility change at all, and how can we understand when it will change? Let's debunk the next myth. You've probably heard that high volatility means high activity and interest, while low volatility means low interest from traders. And when it changes, it means that whales have come in and started trading large volumes. But guys, we trade currency pairs. These are currencies of whole countries. Otherwise, the main reason is news. Political news, elections, new laws, economic sanctions, new trade relationships, new import and export, natural disasters, earthquakes, droughts, and much more that directly affect international trade. Let's focus on economic news. To avoid getting bogged down in the news of every country, there's a great resource where news is published. You have seen it many times in our Telegram community, where, in addition to news, I share signals and trade breakdowns. Subscribe. It's absolutely free. Investing.com. Go to the economic calendar. Choose your time zone. Here, all news that can affect the market is displayed. The more stars, the more important the news. For one-star news for one currency pair, just be more cautious. When there are multiple news items or 2 and 3 stars, it's better to refrain from trading 5 minutes before and 5 minutes after. News affects only those currency pairs mentioned in the news. Exceptions are the dollar and the euro due to their high global demand. Important news can also affect other currency pairs. See how volatility changes during dollar news. To reinforce, let's go through another practical example of using volatility in trading. The law of volatility change is most often seen within the triangle pattern. At the end of the pattern, due to the trend line and level, the price range narrows, as does volatility. The transition from low to high volatility during the breakout is the entry point. Open a trade in the direction of the breakout along the global trend. Regarding the extraction time, in a triangle, the potential price target is its previous extreme. Returning to the note, apart from one cycle of volatility, you need to consider possible retracements, where volatility can change, stop, and then transition to active movement again. Look at the global support and resistance levels. Let's summarize. Now, you understand the importance of volatility and how it is at the heart of any trading strategy. After watching this video, you will no longer be afraid of high volatility and will even be able to use it to your advantage. And of course, don't forget to follow the news as you trade. In this playlist on the basics, I try to highlight every important element of strategies. Write in the comments which topics deserve more attention. And of course, I would appreciate your likes and subscriptions. Stay safe and be in touch.